Early afternoon, 12:25 p.m. Eastern Standard Time as the Fed meeting kicks off. I'm XRP Future Millionaire. We've got a lot to discuss. We have the U.S. stocks remain volatile as Federal Reserve meeting kicks off. We're going to get into that. We're also going to talk about what's breaking out right now. A few hours ago, the Fed is likely to signal a March interest rate hike and that further policy tightening is coming. This came out just about 44 minutes ago. And this came out just under 25 minutes ago. So there's a lot of breaking news coming out. We also got to talk about PBRs up over $13. We talked about how this was a great play. I'm very happy with this in the times of inflation and the times when we really don't have the certainty in the stock market. We talked about this last week, and it's up better than 6% since we started talking about it. Maybe 5.5%, but it's got a 15.8% dividend, and PBR is a crude oil company out of Brazil, government run, and with crude oil, crude oil going up, it's absolutely something you need to have in your portfolio with that high of a dividend. The crypto markets are up 1.32, well, you can say up to 1.66 trillion or 0.81% in the total crypto market cap ahead of the Fed meeting. So what I'm seeing here is a pump and then a dump. This is what we talked about before. Unfortunately, we didn't get to 52 cents, but there were areas to add at 55 and 57. But after this little fake bull run up, little bull trap here, nothing more, nothing less, I think that this is going to capitulate with the meeting, and we're going to end up having long-term holders start to sell finally, and then we can have the proper capitulation. I talked about it yesterday on my live stream. We haven't had that yet. We haven't had long holders selling because they don't have that fear yet that it's not going to come back up. Once they capitulate and they finally sell, that's when you get real liquidation happening, and then we can come down to 30,000, probably 29.5, 28. But until they capitulate and they sell, these long holders, they think that it's going to go back up and it's just going to take longer for it to go down. That was not capitulation at 32,662. It came up too quick. Or it's 668 or 33,000 area. So that's what we're waiting for on Bitcoin. So you're not going to want to miss this update. XRP's at 61.2, up 0.03%. Is this something sustainable, or is this something that's going to literally dump after the Fed talks? I'm going to play the intro, but don't go anywhere because this is going to be one fiery episode. So I want to thank everybody for tuning in. Like I said, we've got a lot of stuff to cover. A lot of people on YouTube are acting like the bottom's in. We hit this great reversal and we capitulated, which I don't understand how they could come to that conclusion. And for whatever reason, they don't put any stock into the Fed meeting today. So let's start here. The U.S. or the Federal Reserve, I want to start with. The Fed is likely to signal a March interest rate hike and that further policy tightening is coming. This was 44 minutes ago. The Federal Reserve is expected to signal at its meeting this week that it is ready to raise interest rates as soon as March and that it will consider other policy tightening. The Fed issues its policy statement Wednesday afternoon at the end of its two-day meeting, and it is expected to show that it is willing to take the steps necessary to fight inflation. Like I said, it started already today and it ends tomorrow. I don't think they're going to be spooked by this, said one strategist of the stock market's correction. They need to tighten financial conditions so they have a better handle on inflation. The Federal Reserve is expected to signal at its meeting this week that it is ready to raise interest rates as soon as March and that it will consider other policy tightening, reversing the easy policies it put in place to fight the pandemic. The Fed begins its two-day meeting Tuesday, and on Wednesday afternoon, the central bank is expected to issue a new statement that shows it is resolved to fight inflation. Against the backdrop of a violent stock market correction, Fed officials are expected to say they're ready to push up the Fed funds rate from 0 as soon as March. We don't expect them to sound dovish, said Mark Cabana, head of U.S. short rate strategy at Bank of America. The bond market seems to be reacting to the drop in equities plus the geopolitical tension, so maybe the Fed sounds Not as hawkish as they otherwise would have, but we don't think the Fed is going to come out and tell the market it's wrong for pricing in 4 rate hikes this year. The Fed has found itself in its first major battle with inflation in decades after 2 years of super easy policies implemented to counter the economic and financial impact of the pandemic. The consumer price index in December rose 7%, the highest since 1982, as we've been talking about. Cabana said the Fed could indicate that its first rate hike since 2018 could be as soon as the next meeting, which would be March. It made a similar comment in 2015 in the statement a month ahead of the first rate hike following the financial crisis. The stock market sell-off, if anything, has made the Fed's job more difficult. The S&P 500 dipped into correction territory Monday, down 10% from its record close before a giant intraday market reversal. With the pandemic continuing and Russia threatening military action against Ukraine, the Fed will have to acknowledge these risks. What they will have to do is say we will respond as conditions warrant. We have inflation to deal with, and even with what we're seeing, financial conditions are too loose. That's the only message they can give at this time, said Diane Swank, chief economist at Grant Thornton. Powell will brief the media as usual after the Fed releases its 2 p.m. Eastern Time statement on Wednesday. Powell's tone is also expected to sound hawkish. I think he's going to say every meeting is live, and we're going to use every tool to address inflation, which is still a problem. Even with the S&P down 10%, it's still up 15% from last year, said Cabana. I don't think they're going to be spooked by this. They need to tighten financial conditions so they have a better handle on inflation. I just don't think the Fed is going to be surprised by this, nor do I think they're going to feel the economy is going to fall off a cliff. Other policy tightenings. Fed officials have also been discussing paring back their nearly $9 trillion balance sheet, with more than double during the pandemic. At their December meeting, central bank officials discussed the balance sheet, and some strategists expect what? Where is this at? Expect the wind down to begin in June or even as early as May. The central bank's asset purchase program, scheduled to end in March, has been the primary contribution to the size of the balance sheet. The Fed has been buying $120 billion of Treasury and mortgage securities a month, but has been tapering back. Once it ends that program, Fed officials are expected to begin to examine how they will shrink the balance sheet. The Fed currently replaces securities that are maturing with market purchases. It could change that operation and make other moves, like altering the duration of securities it holds. The fact they're talking about reducing the balance sheet at the same time they're still adding to it is a bit inconsistent, said Swank. For that reason, she expects there could be some dissent at this week's meeting, and at least one Fed member like St. Louis Fed President James Bullard could push for ending the purchase immediately. And while if that happens, that could make it interesting. Swank said there is also debate within the Fed about how aggressive they should get with rate hikes. Some market pros have speculated the Fed could move quickly out of the gate with a 0.5 percentage point rate hike in March. Through the consensus is for a 1/4 point hike. If they do a 0.5 point hike, the markets are going to crash real hard, and that would be what we're preparing for. By moving on the balance sheet at the same time it is raising rates, the Fed would be quickening the pace of tightening. Swank said every $500 billion on the balance sheet is worth 25 basis points of tightening. 1 basis point is equal to 0.01%. They talk about taking it down by $100 billion a month. They could easily go faster, she said. Market reaction. Cabana said he expects 70 to 80% sell-off in stocks is due to the Fed's move toward tightening policy. He said he has been speaking with investors whose biggest surprise is that the Fed is discussing shrinking the balance sheet. Because face it, guys, if the balance sheet has shrunk, all that money, easy money the Fed's pouring into the crypto and the stock markets, the bond markets, it's all disappearing, especially in the crypto and stock markets. Goodbye. It was telling to me this is a market that was addicted to the Fed put and the belief the Fed always has your back, he said. The notion the Fed could damage the market was unfathomable. Barry Knapp, head of research at Ironside's Macroeconomics, said the stock market's decline was not a surprise and that the 11% drop in the S&P 500 as of Monday was consistent with the average decline after other Fed tightening moves. Starting with the wind down of the first quantitative easing program after the financial crisis, he said there were 8 instances between 2010 and 2018, all averaging an 11% decline. We ought to stabilize in here. I don't think there's much. Fed Chair Jerome Powell can say here that's going to make things worse. Starting balance sheet reduction is under consideration. All the real Dove said, we've got to get started. Inflation is now a problem, he said. The market is going to stabilize because the growth outlook is not deteriorating. Knapp said one of the more worrisome components of inflation is rent and housing costs, which are expected to rise. He said if the Fed moved to eliminate mortgage-backed securities from its balance sheet, that would help slow inflation in general. If they want to tighten financial conditions, they want to slow inflation. The number one contributor to inflation in 2022 is going to be housing-related inflation, he said. Good prices will come down, supply chains will clear, but that increase in housing prices and rental prices, that just is going to keep going up. It's already above 4%. The Fed primary channel for slowing inflation in this case is via the housing market. So I think that is fascinating. And everybody who is investing in the stocks or crypto markets alike, or who have been putting off investing in the commodities market and physical gold and silver, it's time to get your act together. Things are about to happen. And now we're going to read this. I know this is long, but we have to be up to date with what's going on. If we're not up to date, how can we actually understand what's about to take and transpire? Besides my technicals, we already know what's going to happen, but this just validates it. If you appreciate the kind of content I put out, make sure to hit that subscribe button. If you want to take the step ahead, join the exclusive Telegram with 138 people in there now, I believe, or 137. Join Tom's Army, $9.99 a month. You get that included in Tom's Army membership. If you want to donate, there's a link in the video description below. You can donate XRP. There's also Cash App, Venmo, and PayPal. If you want to check out my other content at Swing Traders Anonymous, which I'm only 2 subscribers away from partnership. That's right, I have 998 subscribers. Two subscribers away from partnership. If you're not part of that channel, I cover the total crypto market cap, Tether, Bitcoin dominance chart, the BITO, which is one of 2 Bitcoin ETFs, Ethereum, and Bitcoin. Every day I do one update or 2. And then you can also check out my, and why wouldn't you want to be 999 or my 1,000 subscriber and help me hit that partnership. Also, I have a ISO headquarters where every day I do an update on the ISO current news. So if an article comes out or some kind of implementation news comes out, go to my ISO headquarters. That's also in the video description below. We just went over 670 subscribers. So we're getting closer to partnership on that station as well. So now let's continue. U.S. stock markets. U.S. stocks remain volatile as Federal Reserve meeting kicks off. U.S. stocks appear set for another round of extreme volatility in Tuesday's trading as investors brace for the Federal Reserve guidance on an upcoming interest rate hikes. The Dow Jones average plunged nearly 400 points as of 10:30 a.m. Eastern Time. Investors are dropping risky assets as Federal Reserve begins its 2-day policy meeting. And guys, crypto is the most risky. That's right. Is the most risky asset out there. Even ISO coins are risky right now because the implementation is not in place yet. The central bank is widely expected to signal an interest rate hike in March. The first increase since the blah, 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 blah. The S&P 500 plunged more than 70 points or 1.6%. The broadcast measure of U.S. stocks is flirting with correction territory, which is defined as a 10% drop from its most recent high. The early rout followed a wild day for stocks on Monday, where all 3 major indexes cratered, only to return to positive territory. The Dow plunged more than 1,000 points, only to recover in a furious rebound just before markets closed. The tech-heavy NASDAQ index fell more than 280 points, or roughly 2%. Microsoft is set to report earnings after the bell. And most of these that are reporting earnings are getting hammered. And if you can take anything away from the gold and silver stocks, the commodities, when they did earnings, and these techs that have done earnings, Fuel Cell and IDEX, and these ones that did earnings, iBuy, all these got hammered and went down more than 40%. So look out if you have Microsoft. You never want to hold unless you're a long holder collecting the dividends. You don't want to make a short-term trade around earnings. Most times you get burned after earnings. Even if they're good earnings, you get burned. Apple will report results later this week. Apple and Microsoft each dropped more than 2% in early trading. Meanwhile, American Express surged more than 6% after topping earnings expectations. The CBOE Volatility Index, tracked as a measure of investor anxiety, surged more than 19%. Leading cryptocurrencies continued their rebound after weeks-long sell-off. Bitcoin, Ethereum, and Solana each climbed more than 8%. But what they're not telling you is we never even came back to the head and shoulders neckline. That's the thing, guys. The head and shoulders neckline is at 40,000. So once we fell through the neckline, the only way to reverse this is to get over the neckline and hold that as support. And maybe try to come up to a triple top or create another high. But until we get to 40,000, this is all show. We have a lot of room down here and we dump real far. So pay attention to what's going on and actually listen to what I'm saying in this update. This is probably the most important update I've done in a month. The Fed is set to adopt a hawkish policy stance and ending pandemic era support for the economy as it aims to curtail surging inflation, higher interest rates, increased costs for businesses and consumers, likely slowing economic growth. The market always gets nervous. You've always got to talk the markets down from the ledge whenever there's the discussion of higher interest rates. Longbow asset manager CEO Jake Dollarhide told the Post, "There's a happy medium where rates can go higher and stocks can go higher. People just need to be reminded of that. It's like investors have amnesia every time this happens," he added. The Fed has signaled at least 3 rate hikes in 2022, and we know it's going to be 4, maybe 5, as well as plans to trim its nearly $9 trillion in bond holdings. Geopolitical tensions have also weighed on U.S. stocks as concerns mount that Russia will invade Ukraine. Futures turned sharply downward over the weekend after the State Department instructed the families of embassy staffers to leave Ukraine with Russian troops massed near the border. So that's the news. We needed to go over that. That's vital. And now we already did Bitcoin, but it's up 519 points. Like I said, this is a little to trap some people here, I believe. And unless we can get over that neckline that we broke at 40,000, we really have nothing to talk about here. It's actually at about, this is when it pulled through, but you really need to be over here. So you'd have to get way up there at about 40,000, and you'd have to break that and hold that 40,500 area. Right now, it looks like we're just started this meeting, and of course we would pull up, you know, like we talked about. Can we get up past here and hold a 30-minute time frame? Maybe, but when you start looking at the bigger details, the volume is not impressive. It's going to be hard here to keep going much higher. Bitcoin, we talked about how it could get to 38. That's something that I could see happening. But XRP, again, are we going to be able to get over this? XRP's volume is atrocious. We've got the support at 60486, resistance at the 30-minute time frame till we can break it. But this just looks like some bullshit buys to trap some of the retail investors before we have another dump. Guys, this is not good. What I just read to you was for a reason. Pay attention, be alert. Don't get caught up in all the bullshit. Make sure to hit that like button.